Hello, and welcome to Beyond the Deal. It's the show where we go deeper than the numbers and we talk about all the tips and tricks that lead to success in life and business. And today we have another very special episode for you. So, in the spirit of last week's episode, we're going to kind of continue that, and we are going to be taking you behind the scenes of one of our very own deals. So, today on the show, my guest is none other than the fantastic, majestic Jacobo Jacob Hernandez. And Jacob, if you remember, was actually one of my very first capital raising students. And now here we are, months later, together, raising capital for one of our own deals. So, Jacobo, welcome to the show.
Yeah, thanks for having me, Michael. Very happy to see this process finally come together from the first time I met you. I think it was like almost a year ago. Yeah, last year till now. And now we're doing this really exciting deal. We're raising capital for it. And I'm just excited about the whole journey and the process, man. Thanks for having me.
Yeah, very cool. So, the goal for today's episode for our listeners, we will be hosting a live webinar about this deal in about 2 weeks after Jacobo and I have gone to the property and done our due diligence and taken a lot of content and filmed a lot of things. And we'll have all of that to share with you on a live webinar in a couple of weeks. So be sure to check the show notes for the invite for that live webinar. But today, our real intention here is to kind of take you behind the scenes of everything that's involved in the process, from finding a deal like this, why this kind of deal, what is the market like, and what does it take to actually get it under contract and see it through to the finish line. So first question, what kind of deal is this?
All right. So this is a motel conversion into a boutique hotel. And I don't know if you want to break down the deal right now. We want to get into the numbers or the process, or
We'll get into
how
the
deep
numbers
do you want to go?
later. Let's first talk about, I think anybody who saw your previous episode is kind of familiar with the fact that you come from the world of Airbnb, and boutique hotel is the next evolution of why one Airbnb when you can have multiple units and multiple revenue streams on one property. So if you haven't listened to that episode, go back and listen to it because we really broke down why this is a fantastic asset class. But let's talk about how you even found this deal and where is it?
Yeah. So this is actually in Eureka Springs, Arkansas. And for anybody that's not familiar with this market, it's actually at the cross border of four major states. And that would be Kansas, Missouri, Arkansas, and Oklahoma. So you can actually drive through from a 4 hour distance, even Dallas, you can drive up to Eureka Springs. So it's right at the cross border of those four states, which means that it pulls, or there's within driving distance over 4 million people. Now, this small little town, it's called the Little Switzerland of America, and it attracts over 1 million visitors per year, believe it or not. So there's tons to do out there. There's hiking, there's world-class mountain biking, and actually the owners or the founders of Walmart, they're just down the road in Bentonville, and they're investing heavily into this area. So they just opened up a new state-of-the-art opera theater, and this one's a 300-seat like world-class theater. It's just insane. So again, there's tons of stuff for outdoor and nature enthusiasts to do. There's a safari, there's zip lining, there's multiple lakes, there's multiple rivers to go kayaking on, and overall it's just a paradise for outdoor enthusiasts. And the way I found this deal was actually on market. I think we've talked about this previously, but over a year since we started looking, I sold my short-term rental portfolio after doing all those deals and looking for something that was going to be a little bit more scalable. I went into commercial real estate because I started seeing the huge opportunity right now. Basically, there's all these baby boomers that are retiring, and they have all these outdated, mismanaged assets. So there's 10,000 baby boomers currently that are currently retiring, and a lot of them have these prime real estate assets in prime locations. But because commercial real estate is valued on the current income, you can actually acquire these properties for way below replacement cost. So this current deal that we're buying it at 24% of replacement cost. And that was one of the reasons why I first started looking into this, is because we could apply this digital marketing principles and design and marketing and really bring these assets back to life and tap into the current wellness and experiential boom that's going on with it's a $1.7 trillion industry, and it's only growing more and more. And we'll talk about the vision a little bit later, but started looking really anywhere. We have a full-time person that's looking daily on market, off market, networking with brokers. Like, I've been traveling all across. I was nomadic for 90 days, really touring as many deals as possible. So We underwrote over 2,000 deals, and I toured over 30 deals to get to this one deal. But the moment I walk this property, I step in, see this huge 10-acre piece of land with these tall trees, I was just blown away. And like it felt like home. I honestly, that same day, I told my acquisitions manager, like, we don't need to look anymore. Like, this is the deal. Like, we finally found our deal after one full year of full-time work with my team to really find this one deal. So, I mean, yeah, it's been quite a journey, and I'm happy to finally get this under contract after everything we've been through.
Yeah, and we'll talk about what that took in just a second. But, for those of you who are thinking of getting into this space, potentially being a GP, potentially, starting to underwrite deals, whether it's boutique hotels or multifamily or whatever, I really want to stress that is what it takes, right? Like my first deal, not quite 2000, but 800, right? So, there are a lot of crappy deals out there, and it takes a real refined eye and a lot of effort and a lot of time to find one where the numbers actually work. Now, you mentioned that there's this phenomenon of baby boomers who are mismanaging their properties, or maybe they've just owned them forever. They've never increased the rents. They're not up to date with what's going on with, new digital check-ins and all these kinds of things that you can do today to reduce overhead. But the caveat there is that oftentimes they do own these properties outright because they've owned them forever. So we happen to be able to get 100% owner financing on this property. Can you talk about, what that conversation was like and how that came about?
So basically, I came in with an offer close to what they were asking. The reason for that was because I wanted to make sure that we were able to get a really good seller financing term. So right now we're under contract for $1.2 million. Again, this is 59 units. So we're getting this at just $20,000 per door. It's 20,000 square feet spread across more than 10 acres of land. Now, if you were going to try and rebuild 20,000 square feet of rooms or building, right now at today's price, if you put it at $250 a square foot, that's over $5 million of replacement cost, which means that at the $1.2 million offer, we are getting this at just 24% of replacement cost, which is crazy, right? And that's without even counting the land value. But they were asking, I think, 1.35. We came in at 1.2. And what we did was we offered the seller for them to carry 60% of the deal. So really, we only need to come up with 40% as the down payment, and they're going to finance the rest on a seller finance note, 6.25% interest only payment, which means our monthly mortgage is $3,750. Now, it gets even better. Right now, they have 4 weekly tenants that have been with the property for, I think, a year or two. And these people are on like welfare, or they're retired. And those 4 people are paying $300 every single week. So just with those 4 people, we're able to cover our mortgage. And everybody's familiar with, like, I think what's been happening and going on in the multifamily space, and why a lot of these operators are having to give their property back to the bank and give back the keys. And the reason for that is their debt service is really high. They were expecting to be able to cash out refi, or they're relying on market conditions. Now for us, like, we're guaranteed we're going to have this seller finance for 5 years, and also on a really great interest rate, because it's only interest only payment. So one of the biggest risks, which is foreclosure, we don't have that we got to pay $40K a year to the bank, which are the sellers. And it's a self-sustaining investment as is. It's already cash flowing $400,000 in revenue as it currently sits. That's with no marketing, no automations. They literally give you a key to check in. They have no self check-in. They have a front desk staff, and we're going to come in and we're going to work with influencers. So we'll do all the influencer marketing. We're going to do self check-in. We're going to add AI to handle a lot of the guest messaging and the back end work. I mean, we're going to automate so much of these that day one, we're going to be so much profitable, because what we're doing is we're a hybrid mix into Airbnb and hotels. We're right in the middle. So we're using all of the efficiencies that you find in short-term rentals combined with the scale of hotels.
Amazing. Yeah. $3,700 a month. I mean, and it's self-sustaining as is, right? So you can't even, in Miami right now, you really can't even rent, a 2-bedroom apartment for that much, right? So, and we're getting almost 60 rental units at 20K a piece. I mean, absolutely insane. So, that 2,000 deals worth of underwriting really paid off here. Now, not everything is always smooth, right? Nothing can ever go completely according to plan. So I want to talk about how close we were just about 3 or 4 weeks ago to going under contract and why it had to drag out. So can you explain what happened there?
So basically, we had reached an agreement with the sellers. We sent the LOI. We start working on the PSA. We send it out to them. They said everything was okay. Of course, they needed a final legal review. Now, the broker had originally suggested we work with this law firm, but when we contacted them, they were just outrageously expensive and they didn't really have the time to work with us. So we went with another legal firm that seemed way more reasonable and they also had a lot of experience. And what ended up happening was this same law firm that we had originally contacted, the brokers then recommended that same law firm to the sellers and they ended up hiring them and retaining them. And these sellers were the biggest pain in the butt to work with.
The lawyers.
Yes, sorry, the lawyers.
Yeah.
They came in, completely disregarded our LOI, completely disregarded that we had reached some sort of agreement. They took 2 weeks to do their first initial review, redlined everything in the agreement, and pushed it back like another 2 weeks of back and forth. I mean, it was so painful to go through this. We got on calls with my legal team and their legal team. Those guys were just like, I felt like I was going to court on some like criminal charge, just trying to battle these guys on this like simple agreement, which was not needed. And the brokers started getting fed up. Like they were like, this is insane. We ended up with a 50-page purchase and sale agreement and an addendum that's 50 pages long of just all these stuff that we had to go back and forth. And of course, we weren't going to sign if it wasn't something that was commercially reasonable and that it was protecting us as the buyers. So, I mean, our lawyer did the best. We renegotiated all of the clauses. Towards the end, I had to bluff them. And I'm going to tell you a story. I didn't even tell you this, but this is hilarious. So last week on Friday, I sent an email to my lawyer. Hey, like this is getting ridiculous. If this doesn't, I'm not going to keep the back and forth. One final email to their lawyer. And if they're not okay with this agreement, then I'm going to walk away from the deal or put a pause or work directly with the seller because we can't keep spending legal dollars. Well, I sent that by mistake to their attorney.
Oh,
and I'm just like, oh my God, bro, how did I get into this mess? Anyways, I think it ended up working. It ended up working in the end because that same Monday, the two lawyers got on the phone. They hashed it all out. And Tuesday, we went under contract. So I mean, it turned out well and it's a good story and it was hilarious in the moment. I'm just like, oh man, like, how can this be happening?
Right. Well, so the lesson here to any of our listeners is, lawyers, you do need them, but in the future with AI, who knows? I have a feeling that a lot of them
Hopefully not.
irrelevant a little bit. Sorry to any lawyers who may be listening to this, but they work on billable hours, right? So if they want to get paid, it's absolutely in their interest to drag this out as long as possible, write as much stuff as they can into it, bill more hours. And they don't actually have their client's best interest at heart. They have their own interest at heart, right? And the client and you had already agreed to an agreement on the LOI, and they just didn't even care because they want to get paid. And that's a really kind of morally, it's a gray area in the field of law, and I think most people probably have the perception that lawyers operate there anyways. So it's not really a surprise. But that's what happens. Sometimes these things happen.
The opposite of real estate, because real estate time kills deals. And for lawyers, they got all the time in the world.
Exactly. Hey, really quick. I hope you're enjoying this episode. I just wanted to stop for a second and thank our sponsor, which is me. Nimble Capital Group is my boutique investment firm where we help passive investors access deals built for cash flow, equity growth, and powerful tax benefits. And if you think you've ever wanted to learn how to raise capital and become a GP yourself, I coach a select group of students each month, most of whom will raise over $500,000 within their first 60 days. So check the show notes in the description below to book a call. I'll see you there. So we finally get it under contract. Now, as of basically this moment, I want to go a little bit to the capital raising side of things. Maybe let's dig into the financials a little bit. But first of all, for any of our listeners who are ever thinking about raising capital or ever tried to raise capital, the reason that we are able to have this conversation and talk about this openly right now is because this is going to be a 506c syndication, right? So Unfortunately, that means non-accredited investors are not able to participate. Non-accredited meaning, you have less than $300,000 a year in income if you file jointly with your spouse, 200 if you file singly, or $1 million in net worth. And, that's just the government's way of basically saying you're smart enough to make an investment choice for yourself. And therefore, we are only able to accept accredited investors into this deal, but we are allowed to talk about it in the open. We can go on Facebook, we can blast it, we can do whatever we want. If this was a 506B syndication and we wanted to allow non-accredited investors, we could not do that. We have to have a pre-existing relationship with anybody who invests, but anybody can invest. So that's kind of the difference in case you didn't know. So why don't you tell me, how the capital raise has been going? We're well on our way. How much are we trying to raise? Where are we at today? How much do we need to close? How have those conversations been for you?
Yeah, so the best thing is we only need 440K cash to close, which is not a lot. And within the first week, I started reaching out to my network, and we got almost $1 million committed just from people in my network that had been seeing my process, that had been seeing me on social media, that knew what I was doing. And it's honestly been, I wouldn't say easier than expected, but of course, all the work we'd been doing for the past year had been leading up to this moment. I think one big lesson that I learned from you, Michael, and it was always be racing. And I think race before you need it. If I would have waited to start this process now when I got under contract and I hadn't been going like building these relationships, we wouldn't be where we are today. But because I had been doing all the work and really putting in the reps, we already have all the cash to close and enough to do a big part of our renovations, which is good. And we're only a day in to being under contract. So that's probably the best feeling in the world. And we have a 65-day due diligence process and 85 days to close. So we have plenty of time right now to continue the race. And even if we're not able to, which I don't think so, this is probably going to go so fast. The race is just going to go quicker than expected. We'll probably have all of our funding and all the cash committed by the time the due diligence process is over. But even if we didn't, we could still keep racing after the fact because, again, we only need 440K to close. So we're in a really good position right now.
Absolutely. And so 440K to close, already fully committed, and a self-sustaining property, on the day of close. So we're going to get into projections in a minute. I do want to say that, yes, nobody is coming to find and fund you. If you are, trying to raise capital and you're just quietly sitting in your room hoping that somebody is going to put up their hand and say, hello, I would like to fund your real estate deal, it's just not going to happen, right? So it requires a lot of pre-effort on your part to go out to your network, to tell people what you're doing so that they know that, oh, Jacobo Hernandez, that guy raises capital for boutique hotels. So at some point in the future, he's probably going to ask me for money about a boutique hotel, and I'm going to be interested when he says it. And sure enough, there we are today with probably almost 50% of the raise committed, and we just went under contract. Yeah.
Yep. And a lot of these commitments are literally coming through text and WhatsApp. A lot of them I haven't even gotten a call with, and they were just ready because it's been the whole process. And the capital raise didn't start just last week or 2 weeks ago. It really started last year. So
yeah, with all the effort, all the content, everything that you've been putting out, your network knows who you are, right? And even if you're posting on Instagram and you're getting no engagement, right? If nobody's liking the post and you think, man, nobody's seeing this, but guess what? They're watching. They are watching, and they know what you're trying to do, right?
That's right.
Cool. So let's talk a little bit about what are we even going to do to this property? I mean, so we're buying it for 1.2. We're putting 400 down. We're raising 2 point something. That's like over $1 million that we're going to invest into fixing this property. Let's talk about the vision.
Yeah, well, the vision is the coolest part about this. Back in the Airbnb days, what made us extremely successful, and the reason why a private equity company had ended up acquiring our portfolio was because we crushed it, not only with our marketing and our occupancy and our ADRs, which we were the top 1% of the market with 90% plus occupancy and cash flowing like crazy. It was a mix of great marketing, knowing how to rank, launch on Airbnb, SEO, listing optimization. But then we were incredibly good at the design aspect. And we would have our properties completely decked out and themed with amenities. Every bedroom was different. We were really good at the whole interior design. But aside from that, we had we would buy these lakefront properties. We would add a fake beach. We would add an outdoor cinema. We would add an infrared sauna, outdoor barrel sauna, cold plunge, pickleball, mini golf. We would convert into a game room. Master closet we would convert into a spa, right? We would just add as many amenities as possible. And that's what the modern traveler today wants. People today are investing more on experiences that they are on things. And this trend only exploded more right after COVID, when people started realizing, hey, actually, what's more important is to have experiences in life. And the wellness boom is also big with millennials and all the new generations where they're valuing a lot more their health. They feel how they're connected with nature and how they're connected with themselves. Spirituality is a huge thing. Yoga, meditations, right? So we're combining all of it. And the idea is for us to set up this property just like we did with our Airbnbs. We have 10 acres of land, which means that we're going to be able to do so many amenities, right? And big part of our race is going towards having enough capital to execute on our vision. So we're going to have a massive outdoor movie screen that's going to be going from one tree to the other outside in the forest area. And Michael, maybe we can put a link to the vision video because this one's a better one to just watch and visually, but I'm going to try and paint it as best possible with my words. So we're going to have the outdoor cinema screen. We're going to have saunas, outdoor saunas looking into the forest. We're going to have the cold plunge, right?
Yeah.
We're going to have yoga decks. We're going to have meditation spots. We're going to have, of course, the pool. We're going to completely renovate it and we're going to make it just into like a really cool resort. We're going to add pickleball courts. Pickleball right now is one of the fastest growing sports in America. So of course we have to capitalize on all these trends, right? So it's going to be a place where people can have fun and play and connection, and also the whole wellness aspect, right? We're going to have mini golf inside of the forest. We're going to have game rooms. So all of that same stuff is going to be present at our property. And we're going to try and have as many amenities as we can for our guests and just make it into the most cool and experiential resort possible.
Awesome. Yeah. As a cold plunging millennial, I have to say everything about this appeals to me. I am the target demographic. And, like maybe some of our listeners, I had not been super familiar with Arkansas or just really the Ozark region in general. But as I've sort of talked to people about this deal, I've actually been very surprised that many of the people that I've spoken to actually know Eureka Springs.
Yeah.
If you're in Arkansas, Eureka Springs is the town that you want to be in. That is like the sweet spot of the state of Arkansas. So it's really the perfect deal in the perfect place. Now, let's tell our listeners a little bit about, what kind of returns can they expect on a deal like this? And maybe I can go into a little of how that differs from multifamily as well.
Absolutely. Let's just go over the numbers so you guys can see where the returns for the investor are coming from. The craziest part is we underwrote this deal rooms revenue only, because again, we haven't talked about all of the other revenue sources that we can have, such as just one wedding a week at 5K wedding. That's over $200,000 directly to the NOI. We haven't talked about a resort fee. We haven't talked about kayak or mountain bike rentals. We haven't talked about Tesla superchargers. We could add a couple superchargers on there because this is road fronting US Highway 62. And if you search for this highway, it's one of the major arteries that connect the United States. And there's 10,000 cars that pass by this road every single day. So we could add a store, we could add snacks, we could add F&B, we could lease out for a food truck. I mean, the possibilities with a hotel are endless, which I think it's very unique in the real estate space, because if you look at long-term rentals, you just have the rent. Or if you look at a multifamily unit, you're not going to have all these other revenue sources. But in hotels, it's a business. And when you have all these people, you can even upsell them into, say, all the other experiences you have in Eureka Springs and partner with the zip lining or the safari or any other vendors there and get a referral fee. And you have all this traffic that's already coming to your place. So why not sell them all their stuff? But long story short, not to get too deep into all the other revenue sources, we're underwriting this deal and being extremely conservative, just rooms revenue alone. And at $140 a night at 60% occupancy times the number of bedrooms that we have, which is 59, but we're going to keep some for employees. That's going to bring us at $1.7 million of revenue. And at a 40% profit margin, that's approximately $680,000 in net operating income. Commercial real estate, it's valued based on cap rate. So if the NOI is 681 and that market's cap rate is around approximately 11%, we're looking at a stabilized value of this property of $6.2 million. Remember, we're acquiring it for $1.2 and we're going to have a stabilized value of this property for 6.2. So it's quite the huge gap in from what we're buying it to the forced appreciation and the massive value that we're going to create for this property. Now, we underwrote this deal based on dated 3-star motels. Those don't have any amenities, which that's one big part of Eureka Springs. There's tons of travel, but all these hotels are outdated. None of them have amenities. None of them are tapping into the wellness boom. Eureka Springs is already known for its healing powers for the springs. It used to be during World War II where Army veterans would go up to Eureka Springs to drink the healing waters and to spend time in nature. The place already has that vibe, and it has the vibe, it has the appeal for the wellness aspect, and nobody has tapped into it yet. Again, these are all old operators that just haven't kept up with their properties, but still, there's a lot of demand for this market, and the ADRs or the nightly rates that this market supports are high, ranging from $70 a night, but up to $400 a night for the more nicer resorts, which they're not nice at all. They have no amenities either, but they're charging just premium rates. So again, we're only underwriting at $140 a night, and that's how much the hotel is currently charging. I just received their future bookings report today, and I was looking at their nightly rates, and what we underwrote is what they're currently charging, which is crazy. So we'll know we'll be closer to probably $200 a night, and at $200 a night, that puts us in an $8 million valuation. So I mean, we've stress tested this so much, looked at all the different cases, and this deal is just a home run. So in terms of the returns for our investors, we're targeting a 30% internal rate of return, IRR, and a 3x equity multiple, which means we're going to be tripling all of the invested capital for our investors. And the cap in terms of cash on cash, just purely from cash flow, you're looking at anywhere between 25 to 30% purely from cash flow. So most of these investments, people or investors make their money from the exit, and they need to wait for 3 to 5 years for the operators to exit or cash out refi for them to have a liquidity event. The good thing for us is you're making money from day one. The property is already cash flowing. We're going to do phased renovations. So you should expect to check that same year when we buy the property, not 2 years into the future, not 3 years when we refi, and not 5 years when we exit. You're making cash flow every single year. And aside from that, hotels are the best of the best for cost segregation. And now with the big, beautiful bill, you have 100% appreciation, which is back. And that's going to be incredible for our investors because, again, we pass all of these tax write-offs to our investors. And hotels, they have a lot of furniture. They have a lot of stuff that's going to be able to come in to the cost segregation. And we're going to be able to depreciate that much faster and pass on all those benefits to our investors. So the returns I just said, we're not even accounting all the other benefits, tax benefits, or all the other revenue sources, which we just mentioned.
Absolutely. And I mean, then there's actually some revenue sources we haven't mentioned yet. We'll get into those in just a second. But, you know, the name of the game here is under promise and over deliver. So if 3x equity multiple on a 5-year hold and 30%, you know, cash on cash is based on the 140 number. Imagine, you know, what it could actually be if we hit the 200, 250, even more, you know, really being the most premium product in that space. So we really see, you know, vastly outseeding these projections, but obviously we want to be as conservative as possible in our initial projections. Now, some things that we didn't mention, I know you said there are some tree houses for sale not far down the road. And granted, we own 10 acres of property here with the opportunity to do, you know, RV pads, tree houses. There's really, you know, name of the game. We could do it all. There's a lot of land, a lot of wooded area to create magical paths through the forest to go to your RV camping or wherever, right? So none of that is included in the underwriting as of today. It's really just about taking those 59 units and optimizing them and then creating the whole experiential wellness side, correct?
That's correct. So yeah, you mentioned the RV sides, and if you just take and say we put 20 pads in there, $65 a night with 50% occupancy, that's $237,000 in revenue. And because the operating cost of this is just the utilities and maybe in the water, like the margins, like it's crazy. With that most of that is going to go directly into our bottom line or into our net operating income. And if you look at this from a cap rate perspective, then we're going to be adding, just with the RV sites, over $2 million in forced depreciation to the asset. Now, down the road, there's these luxury tree homes, which aren't even that nice, to be honest, but I think it's 5 or 6 tree homes that are selling for, I think, $3.6 million, just 6 tree homes. 6, not 66. So they're going at like 500K per tree home. I asked the broker for the financials and he didn't want to send them to me, but he did mention they were at 80% occupancy and they were charging over 350 a night. So that just shows you, if you come in with something unique and different, how the occupancy is just way higher than market average, and also your nightly rates, you can actually push them to something much higher than what all these other dated motels are. But we could also, again, we could add campings and glampings, which are low cost implementations. It could be easy to add. There's all these bubble glampings that are tent like, and those would be really cheap to add and just get extra rooms in there. The weddings and events, which we mentioned, we could add a restaurant, the resort fee. We could charge that to like all the locals in the area from Ventiville and Fayetteville and all the places that are close by. They could pay us a monthly fee to use our amenities, to come and use the pickle courts, to come and use the wellness facilities, right? And a lot of the locals go there for the weekend because that's their getaway place in the mountains. So we could make more revenue from there. And again, every $100,000 that we add to our NOI, it's approximately $1 million more that we're adding to our exit valuation or to the stabilized value of the property. So again, the possibilities here are just endless. We have over 10 acres of land. It's commercially zoning, so we can do pretty much anything we want. And Eureka Springs lives off of travel and tourism. So they are very lean with what you can do there. They actually want you to do stuff. So a lot of places, they don't allow you to do tree homes or crazy structures, but in Eureka, you can. And you're seeing them down the road. They've already set them up. So there's already a proven and tested concept that the city does allow for pretty much anything you want, obviously, as long as you're following some of their guidelines. But we feel pretty confident about everything on this deal and the zoning and the city. So, I mean, we just love everything about it.
All right. Well, so with that, we are out of time for today. But like I mentioned at the beginning, this is kind of a look behind the scenes at everything that has gone into getting this deal to where it is. Now, if you want to see the pitch deck, if you want to come to our live webinar, all of that will be in the show notes in the description below. And you can always reach out to either of us personally. We'll have that information as well. So again, we are just under contract today. We will continue exploring this over the next 60 days or so. This episode will probably come out in about 3 or 4 days from the time of recording. And yeah, we look forward to this incredible opportunity. We hope to see you on the live webinar. Jacob, thank you for being.
Thanks for having me, Michael, and looking forward to seeing you all at our upcoming webinar.
That's a wrap for today's episode of Beyond the Deal. I hope you got some valuable insights that you can apply to your own investing journey. Now, if you've enjoyed this conversation, do me a favor, hit that follow button, leave a review, and share this episode with somebody who you think could benefit from it. It really helps the show grow and bring on even more incredible guests. If you want to go deeper, make sure to follow me on your socials. You can find the links in the show notes in the description below. Thanks for tuning in, and I'll catch you next time. Until then, keep going beyond the deal.